Welcome back to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into a financial reality that billions of people face, but very few talk about honestly in mainstream investing media. The topic? Currency crisis. Specifically, the lived experience of people in countries struggling with runaway inflation and the bold, creative, and often risky ways they invest through it to protect their wealth. This episode isn't just about numbers or charts. It's about what happens when money, the thing we all rely on, stops working. It's about how people in places like Argentina, Turkey, Lebanon, Venezuela, Nigeria, and others have found ways to survive, often with little more than instinct, mobile phones, and sheer urgency. And it's about what all of us, whether we're in a stable economy or not, can learn from their playbooks. Because inflation isn't theoretical anymore. In many countries, it's eating away at people's incomes day by day. In others, the fear of it is already shaping how smart investors move. So if you're looking for real-world stories, investment strategies, and ways to hedge against inflation risk, stick around. Let's start in Argentina. This country has faced repeated currency collapses over the past few decades, and by 2024, inflation there hit a staggering 288%. That's not just bad. That's crisis level. It means the value of the peso was being halved, sometimes monthly. Prices tripled in less than a year. And for regular people, that meant that leaving your money in a savings account or under your mattress was financial suicide. People had to make quick, sometimes desperate moves. One of the first reactions was turning to the US dollar. In Argentina, the dollar operates almost like a shadow currency. It's technically illegal to price goods or services in dollars, but everyone does it. Apartments, used cars, long-term contracts, almost all of them are pegged to the dollar. As soon as people get paid in pesos, they rush to convert that cash to dollars or hard goods. Many do this through crypto exchanges, especially for stablecoins like USDT and USDC. It's not about investing in hopes of big gains, it's about staying afloat. Buying stablecoins for many Argentinians became the modern version of stuffing cash in a safe. It's faster, safer, and not dependent on a government policy change. Then, there are those with a bit more capital. Many move to buy property, either local real estate priced in dollars or overseas investments. You'd be amazed how many people in Buenos Aires have their money sitting in Miami condos, or even farmland in Paraguay. And of course, others learned how to invest in US stocks, using international brokerages that let them buy Apple, Amazon, or the SP 500, all while sitting in an economy where their own currency was disintegrating. Now let's shift to Turkey. Between late 2021 and 2022, inflation exploded there as well, hitting more than 85%. The Turkish lira saw its value halved. This was partly due to controversial interest rate cuts and political pressure on the central bank. The result? Mass loss of faith in the currency. What's fascinating in Turkey is the central role gold plays. Unlike in some Western economies where gold is an optional hedge, in Turkey, gold is a cultural mainstay. Turkish families traditionally store wealth in gold coins, bars, and jewelry. It's given at weddings, passed down through generations, and held for tough times. When inflation started biting, people didn't just read about gold, they bought it. Gold shops saw long lines. Jewelry became less about fashion and more about financial planning. People weren't waiting for policy shifts. They were moving their savings into tangible, inflation-resistant assets. Property also boomed in Turkey. As the lira fell, people scrambled to buy real estate to park their wealth. Home prices shot up, some of it speculative, yes, but much of it reactive. And just like in Argentina, some of the more financially savvy Turks started looking outside their borders, investigating how to open brokerage accounts in the US or buy apartments in Spain or the UAE to hedge their bets. Then there's Lebanon. Lebanon's financial crisis may be one of the most devastating of the 21st century. After years of mismanagement, the Lebanese banking system collapsed in 2019. People found themselves locked out of their own accounts. Overnight, decades of savings became inaccessible. And even when money could be withdrawn, it was often forcibly converted from US dollars into Lebanese pounds at rates far below market value. Inflation soared past 200%, but in reality, the economy became a dual currency system, a formal one with worthless pounds and an informal one run on physical US dollars and barter. So, what did people do? They turned to crypto. For many Lebanese citizens, Bitcoin, Ethereum, and especially stablecoins weren't speculative tools. They were the only way to send, receive, and hold money securely. Peer to peer crypto markets flourished. Family members abroad sent funds in crypto. Traders swapped digital currency for groceries or fuel. Lebanon became a case study in crypto adoption driven not by innovation, but by necessity. Let's take a look at Nigeria. This is Africa's most populous country and home to one of the world's fastest growing youth populations. But it's also a place that has battled inflation for years. In 2024, inflation rose above 30%. The naira was repeatedly devalued. But the Nigerian people, especially the young, responded with resourcefulness. One of the most widespread trends was the explosion of fintech. Mobile apps like Shaka, Bamboo, and Rise allowed Nigerians to invest in US stocks from their phones. They could buy fractional shares of Apple or Google and escape the naira trap. At the same time, stablecoin use skyrocketed. Many young Nigerians saved in USDT, used crypto for remittances, or earned in dollars by freelancing online. Dollar incomes became the ultimate hedge. These are just a few examples, but they reveal a pattern. When inflation hits, people shift to hard assets, foreign currencies, and decentralized financial tools. They prioritize access, control, and reliability. They don't wait for governments to act, they move. And if you're wondering what assets people turn to, gold is top of the list. Universally recognized, culturally embedded, and inflation resistant, gold has proven time and again that it stores value when paper money doesn't. Crypto is next, not just Bitcoin, but stablecoins like USDT and USDC. These tokens offer the reliability of the US dollar with the accessibility of mobile money. Foreign stocks are also growing in popularity. Thanks to global platforms, investors can now diversify internationally without needing a bank branch in New York or London. If you're serious about building a portfolio that's not tied to a single country or currency, I highly recommend exploring a class-leading trading platform. Head over to crystalballmarkets.com. It's a world-class, cutting-edge, user-friendly trading platform app built for traders and investors who want access to global markets without the friction. Whether you're looking to get into commodities, forex, stocks, or crypto, it's a platform worth checking out. And if you're just starting your investment journey or want to brush up on market basics, I've got something for you too. The Crystal Ball Markets podcast is packed with beginner-friendly episodes on trading, investing, and financial market insights. It's one of the most practical resources out there if you want clear, no-nonsense education about markets, especially in volatile times like these. As we wrap up today's episode, here's the core idea I want you to take away. Inflation is no longer a developing world problem. It's a global risk. And while you may not be in a crisis now, the time to build resilience is before the storm, not during it. The stories from Argentina, Turkey, Lebanon, and Nigeria show us that people are capable of incredible adaptation. And with the right tools and mindset, you can be too. So whether you're in Asia searching for ways to invest in US stocks, or you're living through inflation in Latin America or the Middle East, know that you're not alone and you're not powerless. You have options, and you have people like us sharing the knowledge that gets you ahead. Thanks for listening to Financial Market Insights for Traders. I'm Sophia, and I'll catch you in the next episode.